Hello, YouTubers, friends, compatriots, Coolers, Shills, Nestle, Sharks, Peasants, Vassals, Minions. I'm a useful idiot, and good morning. Today I want to talk about banker scum. And a favorite topic of mine, although it seems like people are less interested in stories about banker scum these days. An unfortunate development. We should always be interested in what banker scum are up to. So anyway, one of my mantras, along with Max Kaiser, one of his mantras as well, is that all the banks are broke. And a story came out recently that just reconfirms that once again. A story came out in Bloomberg, so it's a fairly credible source. And it's the fact that European banks have capital shortfalls of 767 billion euros. Yeah, that's $1 trillion. So $1 trillion of shortfall. And this is due to new provisions for credit loss reserves by the end of 2014. And unfortunately, the banks just cannot keep ahead of rising bad debts and deterioration in their asset quality. And so they come up with $1 trillion of shortage based on a benchmark capital ratio of 7%. And of course, already Draghi and the ECB are talking about juggling the benchmark capital ratio so that these broke banks can somehow make these new stress tests. And that's another part of this. We're having another round of stress tests to once again prove that these banks can weather a catastrophe. And we've seen numerous stress tests over the last 5 years, and they've proved nothing. And of course, one way we know they prove nothing is because they have to keep having them to prove once again. But let's look at some of these numbers. They're pretty staggering. So we have France banking system needs 285 billion euros. Germany's banking system needs 199 billion euros. Spain's banking system needs 92 billion euros. And Italy's banking system needs 45 billion euros. And this doesn't include regimes like Belgium, Cyprus, and Greece that they know are standing in line for a new round of bailouts. But this is an examination of 109 of the 124 banks that will be overseen by the ECB in this new arrangement. And they include the biggest banks in Europe, including Deutsche Bank and Banco Santander. And this $1 trillion is only the amount that they need in capital reserves to cover for losses. That doesn't show how much a hole they have in their balance sheets. And we get an idea of that. For example, Italy needs 45 billion euros in order to backstop loss reserves, and yet S&P estimates in Italy alone the stock of bad loans is to rise to over 300 billion euros, or 18% of customer loans. So in actuality, they're estimating Italian banks have $300 billion in rising bad debts and deteriorated assets, and yet they're only going to set aside 45 billion to cover for those eventual losses. So, and then the other thing one has to factor into this is that the numbers are undoubtedly much larger than this. They always lowball them. So to suggest that European banks need $1 trillion in loan reserves, and that's only at 7%, so that shows how much they're leveraged as well. We can expand that number. I'm not sure by how much, but we know that it's going to be a lot larger than that, and they will continue to come back with revised numbers. And this is a phenomenon that's happening everywhere. Of course, HSBC just found out they have a 110 billion pound hole bad assets in their bank, and so their capital ratio is all a mirage as well. So once again, we see all these banks are broke. And another important aspect to keep in mind about this is after all the secret loans by the Federal Reserve, trillions of dollars to European banks for the last 5 years. Part of the QE that we have now, part of that money is still going to European banks, and yet they still have massive holes on their balance sheets and are all essentially broke. It's pretty predictable what the results are going to be. It's going to be either bailouts or bail-ins. And in fact, there's a quote from this new study about European banks. It says, quote, "Our results suggest that with common equity issuance and haircuts on subordinated creditors, it should be possible to deal with many banks' capital needs. Some will, however, require public backstops, especially if bail-ins are difficult to implement without imposing losses on bondholders who may themselves be other banks and systemically important financial institutions." So what we're hearing here in this paragraph is that not only are there going to be haircuts for subordinated creditors, which is going to make people need, but it is possible, they say, that they will require public backstops, which is another word for bailouts. So these banks are going to need public bailouts or ECB bailouts, and they're going to try bail-ins first. But the caveat here, this is a great part of this, the caveat there is that the bail-ins may be difficult to implement because the other bondholders in these banks are other financial institutions, because all these banks have been buying their own crap back and forth. So that jeopardizes the whole situation with bail-ins. So, but there we have it. Another quote is, "Most likely a substantial lack of capital in many peripheral and core European banks," unquote. So what we have here, like I say, is a $1 trillion shortage in European banks. They're all broke. They're all broke after 5 years of bailouts and bail-ins, and that there are further bailouts and bail-ins coming up. I'm a useful idiot. Don't you be one too.